All right, let's get right into it. Today, we're tearing down a really fascinating research report on a company called Zeta Global. And this is what Wall Street calls a battleground stock. You've got one camp screaming that it's the next big thing in AI advertising, and another camp claiming it's all just a house of cards. So, which is it? Let's find out. But here's the thing. To even understand Zeta, you first have to grasp this huge, fundamental crisis that's happening on the internet right now. I mean, it affects pretty much everyone. The very foundation of online advertising, the engine that pays for so much of the web, it's starting to crumble. For the last, 20 years, the entire internet has basically run on this one little piece of tech, the third-party cookie. You know the drill, right? You look at a pair of sneakers on one website, and suddenly, ads for those exact sneakers are following you everywhere else you go. That's the cookie at work. It's how everything has been done. And now, poof, they're going away. Apple and Firefox already gave them the boot. Google's in the process of phasing them out for good. And for advertisers, this is a total catastrophe. They call it signal loss. It basically means they're flying completely blind. So right in the middle of all this chaos, in walks Zeta Global. The company's entire pitch, their whole reason for being, is that they saw this coming from a mile away. They've spent more than a decade building a weapon for a world without cookies. So what is this secret weapon? It's called the Zeta Data Cloud. And the scale here is, well, it's immense. We're talking profiles on over 245 million adults in the US alone. That's pretty much everybody. And the key is, this wasn't built with cookies. It was built over 15 years by getting direct consent from people. So they can target ads based on actual, real human profiles, not some anonymous browser file. For brands adrift in this new world, Zeta looks like a lifeboat. Okay, so you'd think this is a slam dunk, right? Huge problem, perfect solution. The stock should be going to the moon. Well, not so fast. In November of 2024, the whole story got flipped on its head. A very well-known short seller dropped a bombshell report that basically called Zeta a fraud. The stock tanked, dropping 37% in a single day. And this is where the fight really begins. The short report made three big accusations. First, they accused Zeta of round-tripping to fake its revenue. But the company and its auditors fired back saying these were totally legitimate transactions. Second, the report claimed Zeta's data came from sketchy consent farms. Zeta's response? That's just a scary-sounding name for what is standard and totally legal lead generation. And finally, the report tried to stir up confusion about who their auditor was, which Zeta shut down pretty quickly by confirming it's always been Deloitte. Okay, so you have a classic he said, she said situation, but the analyst knew you can't just take their word for it. You have to follow the money. You got to look at the numbers. Does this company actually look like a fraud, or does it look like a powerhouse tech company? Let's start with the number 17. For 17 quarters in a row, that's over 4 years, Zeta has beaten Wall Street's revenue forecasts. The analyst in this report calls that a statistical rarity. That's not luck. That's a sign of incredibly strong execution. Next up, let's talk about real cash. The analyst is projecting Zeta will generate $209 million in free cash flow in 2026. And this is so important because, you can play all sorts of games with accounting metrics, but cash in the bank, that's much, much harder to fake. And finally, growth. We're talking projected revenue growth of over 30% for 2026. That doesn't just suggest the business is healthy. It suggests it's hitting the accelerator and joining a really elite club of high-growth tech companies. So the company's track record looks really solid. But the analyst argues that this whole controversy has made everyone miss the real story, which is what's coming next. They see three powerful tailwinds that could make 2026 a monster year for Zeta. Tailwind number one is an acquisition they just made, a company called Marigold. Now, this isn't just about bolting on $190 million in new revenue. No, the real genius here is the cross-sell. Marigold has thousands of clients who send emails, but they have no good way to find new customers. And Zeta has one of the world's best databases for doing exactly that. It's a perfect match. The second tailwind, well, this is where things get a little bit sci-fi. It's an AI agent they built with OpenAI called Athena. Just look at the difference. The old way of launching a marketing campaign could take a whole team of people 2 full weeks. With Athena, one marketer just types a simple command, and the AI does everything else in about 20 minutes. That's a game changer. And the third tailwind,
This one has nothing to do with Zeta's own tech. It's about a giant wave of cash that's about to hit the advertising market, whether they're ready or not. I'm talking about the 2026 US midterm elections.
Analysts are projecting a mind-boggling $10.8 billion will be spent on political ads. That's the most expensive midterm in history. And for a company like Zeta, whose whole platform is built to find and target very specific groups of voters, well, it's basically their Super Bowl. So let's put it all together. You've got a company that weathered a massive storm, is posting elite-level numbers, and has three huge growth engines firing up. So how does the analyst translate all of that into a verdict on the stock? This table really gets to the heart of the analyst's entire argument. They compare Zeta to its peers, companies like The Trade Desk and HubSpot. And what you see is that even though Zeta is growing just as fast, or even faster, the market is valuing it at a massive discount. It's trading at like half the multiple of its competitors. And if you're a visual person, this chart makes it crystal clear. Look at that gap between Zeta and The Trade Desk. It's not subtle. The analyst's point is that the stock is basically on sale compared to where it should be trading. And this quote from the report just wraps the whole thesis up perfectly. The analyst is saying that the market is still punishing Zeta for the old news, for that short report. That's the uncertainty penalty. And in doing so, it's completely missing the incredible growth and cash flow that's right around the corner.
So, the bottom line from this report, the official recommendation is a buy, and the price target is set at $32, which, from where the stock was trading, implies a potential upside of nearly 100%.
Which really brings us to the final question, doesn't it? This report makes a really compelling case that Zeta is a fantastic company that got unfairly beaten down by the market. But the risks that short seller pointed out haven't completely disappeared. So the ultimate question for any investor is, which story do you believe is closer to the truth?